Let me ask you something. Curious, if someone told you 3 years ago that silver would be sitting at nearly $70 an ounce in March of 2026, you probably would have laughed. Most people did. Silver was the forgotten metal, the one sitting in gold's shadow, the one retail investors picked up as an afterthought, the one Wall Street analysts mentioned briefly before moving on to something more exciting. Pause. Nobody is laughing now. Silver just hit $69.39 per ounce as of this morning in the US market. That is not a typo. That is not a temporary spike driven by one news event. That is the result of a structural shift in the global economy that has been building for years and is now impossible to ignore. And if you do not understand why silver moved this far this fast, you are going to miss what is coming next. Because the same forces that pushed silver from $28 to nearly $70 are not done. They are accelerating. And the next major level that every serious analyst is now watching is $100 per ounce. In the next few minutes, I am going to walk you through exactly what drove silver to where it is today. I am going to show you the data behind the move that most financial channels are not explaining clearly. I am going to break down what the biggest institutions on Wall Street are saying about where silver goes from here. And I am going to give you an honest picture of both the bull case and the risks, so you can make your own informed decision about what this market means for you. Stay with me because this is one of the most important commodity stories of 2026, and most people are still sleeping on it. Let us start with the number that defines everything happening in silver right now. 5. That is the number of consecutive years the silver market has been in a supply deficit. 5 years in a row where the world has consumed more silver than it has produced. 5 years in a row where mining output, recycling, and above-ground inventories have failed to keep up with the demand being generated across multiple industries simultaneously. That is not a blip. That is not a one-year anomaly caused by a single disruption. 5 consecutive years of supply deficits is a structural imbalance that compounds over time, and the pressure it creates does not release quietly. It releases in price. To understand why the deficit is so persistent, you need to understand something about silver that makes it fundamentally different from gold. Gold is primarily a financial asset. Around 95% of all gold demand comes from investment, central bank reserves, and jewelry. Industrial applications account for only about 5% of annual gold demand. Silver is the opposite. More than 60% of all silver consumed every year goes directly into industrial applications. Not jewelry, not coins, not ETFs, industrial use, real-world manufacturing, real-world technology, real-world infrastructure. And the industries consuming silver right now are not slow-moving legacy sectors. They are the fastest-growing sectors in the entire global economy. Solar energy is the single largest industrial consumer of silver on the planet. Every solar panel manufactured requires silver paste in its photovoltaic cells to conduct electricity efficiently. As solar installation has scaled globally at a pace nobody predicted 5 years ago, the silver demand it generates has scaled with it. The numbers are staggering. Global solar capacity additions have broken records in each of the last 4 years, and the projections for the next decade suggest that trajectory is not slowing down. Every gigawatt of solar installed is silver consumed, and the world is installing gigawatts at a pace that is straining the supply chain of every material that goes into a panel. Electric vehicles are the second major driver. Every EV on the road contains significantly more silver than a traditional internal combustion engine vehicle. Silver goes into the battery management systems, the charging infrastructure, the sensors, the electrical connections throughout the vehicle. As EV adoption has accelerated across the United States, Europe, and China, the silver demand generated per vehicle has added up to a consumption figure that the market was not fully pricing in 2 years ago. It is pricing it in now. And then there is the driver that most silver analysts were not talking about 18 months ago, but cannot stop talking about today. Artificial intelligence infrastructure, data centers, the physical hardware that powers the AI revolution requires silver in its high-efficiency electrical components and thermal management systems. As the build-out of AI infrastructure has accelerated globally, the silver demand it generates has become a new and growing input that is layering on top of the solar and EV demand that was already stressing supply. 3 massive demand vectors pulling from the same constrained supply at the same time. That is why silver went up 147% in 2025 alone. That is why it is sitting at $69 this morning. And that is why the supply deficit is not going away. Now let us talk about what the biggest institutions in the world are actually saying, because the institutional forecasts for silver in 2026 are not modest. JP Morgan Global Research has put an average price target of $81 per ounce for silver in 2026. That is JP Morgan, one of the most conservative and widely followed research operations on Wall Street, putting a number on silver that would have seemed impossible 3 years ago. They are not alone. Bank of America has a price target on silver that goes significantly beyond what most retail investors are prepared to hear. Their analysts have pointed to the persistent supply deficit, the EV and solar demand pipeline, and the structural shift in industrial consumption as the basis for a forecast that places silver well above current levels before the end of this year. Their target represents more than a 400% move from where silver was trading just 18 months ago. And then there are the independent analysts who cover the precious metals market with a focus on supply and demand fundamentals. Alan Hibbard at Gold Silver, one of the most followed silver analysts in the space, has stated publicly that silver trading above $100 per ounce in 2026 is not a bull case fantasy. It is a base case expectation given the supply and demand math. His more aggressive scenario puts silver above $175 per ounce if the deficit continues to deepen and investment demand accelerates on top of industrial consumption. $175 on a metal that was trading at $28 in early 2024. Now, I want to be honest with you because this channel is not here to sell you a narrative. It is here to give you the full picture. So let us talk about the risks, because they are real and they deserve the same attention as the bull case. The strongest headwind silver faces right now is the US dollar. Silver is priced in dollars globally, and a strengthening dollar makes silver more expensive for international buyers, which can suppress demand and put downward pressure on price. If the Federal Reserve maintains higher interest rates for longer than the market currently expects, the dollar could strengthen further, and silver could face a period of consolidation or pullback before its next leg higher. Tariff policy is the second major wildcard. The current trade environment in the United States is creating uncertainty around the physical silver market. If Section 232 tariffs are applied more broadly to precious metals imports, the physical liquidity of silver outside the United States could tighten sharply. In the short term, that could create volatility. In the medium term, analysts at JP Morgan believe it would ultimately be price positive as supply constraints intensify. The third risk is a global economic slowdown. If geopolitical tensions or a deterioration in major economies produces a sharp contraction in industrial output, silver's industrial demand base could soften. Unlike gold, which would likely rally in a risk-off environment driven by safe haven demand, silver would face pressure from the industrial side of its demand equation even as investment demand picked up. That dual nature is both silver's greatest strength in a bull market and its greatest vulnerability in a downturn. So where does that leave us technically right now? Silver is currently sitting at $69.39. The key support level that technical analysts are watching sits at around $84 on a longer-term chart framework, with the 50-day moving average providing near-term support at similar levels. Below that, the 100-day moving average sits near $68, which means silver is currently testing a significant technical zone. A sustained hold above current levels would confirm the broader uptrend remains intact. A daily close above $84 on strong volume would signal a continuation toward the $100 psychological target that is now the most widely discussed level in the silver market. $100 per ounce on silver is not just a price target. It is a threshold. It is the level at which silver's move from an overlooked commodity to a mainstream investment narrative becomes impossible to ignore for the average investor. When silver crosses $100, the financial media covers it wall to wall. Retail investor attention floods in. ETF inflows accelerate, and the momentum that drives a market from one psychological level to the next begins compounding in ways that supply and demand fundamentals alone do not fully capture. The move from 69 to 100 is a 44% move from current levels. In a market that went up 147% in a single year, a 44% move to the next major threshold is not an aggressive expectation. It is a measured one. And the timeline most analysts are working with for that move is not years away. It is months. Here is the bottom line. Silver is at $69 this morning because 5 years of supply deficits, 3 simultaneous industrial demand drivers, and a global economy increasingly dependent on the technology that silver makes possible have fundamentally repriced this metal. The institutions that follow this market most closely are not calling for a pullback to the mean. They are calling for continuation. They are calling for $81 for $100 for numbers that would have seemed impossible when silver was sitting at $28 and nobody was paying attention. The question is not whether the forces driving silver higher are real. They are real. The question is whether you understand them well enough to know what to do with that information. If you found this breakdown useful, drop a comment below and tell me where you think silver goes from here. Are you in the $100 camp, or do you think this market is running too hot? I want to hear your view. Like this video if it gave you something the mainstream financial channels are not giving you. Subscribe and hit the notification bell so you are here when we cover the next move in this market. And click the video on screen right now to go deeper on the forces reshaping the commodity markets in 2026.